Howdy ho, everyone, and thank you for joining me for today's edition of Trading Buddies, where Ash, myself, and George via video will be attempting to show you what we're looking for in the coming week of trading. We may even find a trade or two to take. We never know until we have a good look. Let's start by having a look at the gold charts, gold versus the US dollar, and here we go. Let me get rid of a couple of indicators here. There we are. And we're looking at the 1 hour chart on gold to see if we can find a breakout as we get into London session or as London session opens. What I like to do is isolate the range between, pardon me, the start of Asia, which is generally the second candle of the day, and I'll find the low since then and the high since then. We will attempt to break out or find the breakout levels if they're tradable. And what I mean by that, if we're not trading into a strong resistance. Hi, Paul P. How are you, mate? Good to see you. And if that's reasonable, we will look to take the trade. It doesn't look reasonable to me because we're trading straight into DR1 and straight into the daily pivot should we decide to take that breakout. So there's the range. Breakout only goes to there before we hit resistance or there before we hit support. So I'm not interested in taking the trade today. Can't see my charts. Well, that's a bit of a bugger. Let me see if I can fix that. That must have been because I wasn't sharing them, Paul. Sorry about that, mate. That should now change. And has it or has it not? Can you see now, Paul? Happy days. Thanks, mate. Righto, so as I said, here's the entry for our long, here's the entry for our short, here's the daily pivot, which is strong support. Here is DR1, the first resistance level of the daily pivot, and I don't want to trade into that. It's also MR2, which shows you how strong the move for gold has been in the last few weeks. I'm expecting that might retrace a little bit deeper than we're seeing at the moment. These retracements not going too far at all. In fact, this one didn't even come to the daily pivot today before it took off. I suspect that that may change, but it's very, very difficult to trade gold short at the moment, given the strength of the trend, which is undeniably bullish. Righto, let's take a look around at what we can trade then. I'll start with the indices or the currency indexes. And they are not there. They are there. Right, dollar first up. And the dollar, hang on 2 secs, guys. I have a message I have to look at. Okay, it's all good. This is the dollar index, and the dollar is telling me that it's at a support and resistance level, very strong. And I'm not too sure if I wanted to rely on what the Fed dished up on Thursday, our time, most of us. I'm not too sure I want to trade against that because it was a 50 basis point cut. Yes, 25 was locked in by the market, but the market just doesn't know what it wants to do here. You can see we've broken the resistance triangle trade line and retested it. That would, in my world, show me that if price goes back to there, it's going to come down to here, or at least a support level, maybe here in the first instance. Hasn't done that, and that's kind of telling me that something else is going on. So if something else is going on, then potentially the dollar is going to rise again off this strong support level. So I'm a little bit on that side of the fence, but I am on the fence. So not 100% sure where the dollar goes next, but it is strong level that we are currently sitting at and have been for the last 4 weeks. Make that 5 weeks since we got there. So very, very interesting. the dollar, I'm not sure, but probably favouring the upside. Aussie, well, the Aussies, pardon me, since we saw this double bottom or tweezer bottom sitting down here, has gone into trend, and we kept talking about this rejection every time that they tried to sell it off. They rallied. The last time that happened on this level, of course, it went bang, bang, bang in three fell swoops on the weekly chart. Pullback has been probably to the breakout level, which you might expect. Then we gapped up, and now we're at this resistance level. This is going to be determined. The directional bias that I have on the Aussie is bullish, but the direction that we're going to see this week is going to be determined very much by what the RBA has to say tomorrow. So yeah, probably want to stay out of the Aussie, unless of course you're full of bravado and have a clear idea as to what the RBA is going to say. And I think the RBA will say exactly what they've been saying for the past 6 months or 8 months. But if they don't, then this will move. But I'll wait and see. I'm absolutely bullish until the RBA says something that turns me the other way. In terms of the Canadian dollar, a little bit different in that we've snuck back underneath this resistance trade line, which is a long-term trade line. Probably looking at the bottom side of that before we go long again. I'm not sure what causes the Canadian dollar to go long again. Hasn't had great press, although I think on Friday it had decent figures. But this very, very strong move has only given us a retracement back to the breakout level, really. So potential for that to go long still remains, yet we are still underneath that resistance area and possibly going to here first. So a little bit bearish, the CAD, not overly committed to it though. Can't help but be bullish from a technical perspective on pound. Pound just looks to be on fire at the moment, in a very, very strong uptrend and very, very swift uptrend. And I can't see that stopping by that candle anytime soon. Very, very big breakout of the horizontal level there last week and closed pretty near its high. I would be probably, well, not probably, this is the one for me from a chart perspective that should perform best this week as well. Maybe a little bit of a pullback, but you know, my thought process here is this: of if I can get in anywhere here, be it above this candle by, you know, a few pips, and I've set a pound versus Swissy trade that I'll show you shortly to that effect. But there may be a better way to get into it when we get to the pound Swissy. I'll show you what that might be. Speaking of the Swissy, there it is. And the reason I'm a little bit bearish to Swissy this week is because of this technical chart, which is showing me a very strong tweezer top sitting on this former resistance level. I do expect downside on the Swissy this week based on that. Nothing else. Maybe only to the middle of that ascending channel. So not probably a long-term thing, because I still see the top here as a target for the Swiss buyers. Pardon me. We'll see how that pans out. But this week, bearish the Swissy. Kiwi, very, very similar to the Aussie, and may well get a piggyback off the Aussie if the RBA is somewhat hawkish, as they have been. And I would anticipate that if the RBA does remain fairly hawkish, that we'll see the Kiwi rally beyond this recent resistance level and find this this former resistance level at around about the $63.50 or 63 cents and 50 mark. 63.5 cents. Let me get that out properly. The yen, well, what a beast. The yen last week had a shocker, of course, but it had a shocker only 6 weeks ago and then took off again. I'm in two minds here whether this, what is absolutely skyrocketing rally since we got down to the 61.60 mark, or 61, nearly 62 mark. Since we got there, it's just skyrocketed. Small retracement, then took off again, found this resistance level and pulled straight back off it. There were fundamental reasons for that, and not the least of which, of course, everybody wanted to sell it. that is, the big boys seem to want to sell it, and we saw that manifested in last week's very, very big bearish engulfing candle. I'm not sure about this. Is this that short covering rally? If so, it's a bloody big one. And if it's not, then this may well continue on. In my world, that's a break and retest of a resistance level. And therefore, if price were to come back above that, I think we go looking for the next one, which is probably up here somewhere. I'm probably of that ilk from a technical level, but like to hear from Ash shortly as to how that stacks up from a fundamental, COT, and seasonal point of view. Because the euro is at resistance, I'm probably a little bit on the hold side. I don't expect that this is going to go south anytime soon, real fast, because we're in a very, very strong uptrend, similar to the pound. The difference between this and the pound, of course, is the pound's got through that resistance level and closed on its high, whereas the euro did not get through that resistance level and didn't close on its high. So maybe the euro pound trade that we spoke about last week was a good one and maybe worth following on that basis alone. So what I'm saying, I suppose, is buy the dips on the pound and sell the rallies on euro versus the pound. That's where I'd be headed from that point of view. Let's go back to the charts and see how that works. The pound Swissy trade that I spoke about, I've got an entry at, it doesn't show on this chart because I used, maybe it does if I go back to here and look at the market scanner. There you go. Doesn't tell me the entry though. Why doesn't it tell me the entry? That's weird. Anyway, I think I can remember the entry. The entry is at 1.1345. 1.1345 if you want to follow it. My stop loss is at 334 pips below that. It should tell me what that is actually. No, it doesn't. Bugger. Okay, you do your maths. 334 pips below what I gave you was an entry. First take profit. Where have I got that, for goodness sake? Just under MR2 or just on MR2, I think it is. Guys, I cannot remember, and it doesn't show me, which is really annoying. But it might tell me how many. Yep, 276.1 pips, I might add. Don't forget the 0.1. 276 pips above the entry level, which was, once again, 1.1345. That's pound versus the Swissy. I've also chosen the Swissy as another short, and this one is Swissy versus the yen. Now, go back to that yen chart. You remember that I'm saying if price on the yen does rally and go through that big bearish engulfing bar, this is the same thing upside down, right? Big bullish engulfing bar is the same represented as on the yen index as a bearish bar. So same applies. If price were to come back below here, then I do think we'll get a support level hit. And the entry level for that, if you wanted to follow it, is 176.25. My stop loss is rather large above the monthly pivot at 520 pips. And my first take profit is going to be 325 pips, which I think I can tell you. First take profits at 162.000. And the stop loss is at, show me. You can do it. 170.45. There you go. This is a weekly trade, of course, as is pound versus the Swissy. Reason that I'm willing to take as much risk as that is because if this actually did reverse, my goodness, look at where it's got to go. First port of call may well be here after we get through this noise. We could be looking at that. We could be looking at that. We could be looking at that. We could even be looking down here somewhere. So that's why I'm more than willing to take this position if the yen were to come back into favor. It may not, of course, and if that's the case, we shouldn't be taken into that trade. So they're the two that I've chosen to trade, but there's a few things still on my list that I haven't mentioned for the week. One is Aussie versus the CAD. Now, this is, if I can find that, there we go. This is on the weekly chart showing me bullish price activity, but resistance level, of course. The reason I've chosen this one as a watch is because of this. Well, this range goes back down to here, actually. Very, very early days on this, but this classic ranging pair, of course, because they're both commodity currencies, this could very well stay in this band. And if the RBA don't give you a hawkish outlook, then this could be one to trade, Aussie versus the CAD. Not that I'm bullish the CAD, but from a technical perspective, that does look to be interesting to me. The only thing that's also interesting is coming off this double bottom, you're now at probably the third higher low out, which suggests that this rally will continue. The reason I'm pointing this out is if this level breaks and retests, then there's a trade long as well. But it depends on the RBA, as I say. The other one also involves the CAD, and one of Ash and my favourite, or is it? The CAD is showing me a big bullish engulfing bar and a very, very big retracement at this point. I just mentioned the third higher low out for Aussie versus the CAD. Well, this is about well, it depends which one you want to count, but this is in the down channel, and I expect this level here, where we're currently at, horizontally as well, will be the testing material. If we can break it and retest it, this could be off. The reverse applies, of course, if we come back inside that channel and find a lower high. Look, there are a few other things that have caught my eye, but I want to come to Ash now, and in particular the yen. Very, very interested about the yen and what on earth we should expect from that in the next week, month, and towards the end of the year. Hello, Ash.
Hi, mate. Yeah, do you know what? I
Your
think it's
microphone, your
sorry.
microphone up, buddy.
I got it. I got it. Yeah, I think it's an interesting question, mate. I actually looking at the yen's data, the COT report is incredibly negative for the yen. So it has been sort of eroding for probably the last month. You've just seen the buyers just completely dissipate, and it's probably the levels are hyper extreme for the sell side. Now that doesn't mean that
Wow.
it's going to play out this week, but it does because when you sort of when the move happens, and we saw a bit of the move last week, as you pointed out with the yen. As soon as that move happens, it starts just to dilute the messaging from the COT report for the period that was leading into that particular move. So until when the move happens, then you start to wonder whether the sellers have been satisfied because the data's backward looking and is reported on a Tuesday. So even though there'll be new data tomorrow, we won't actually receive those numbers until Friday. Now, if
Right.
those numbers on Friday come out, if the yen doesn't move negatively this week, and the numbers come out on Friday and they're still negative, that would suggest we're still looking at further downside for the yen. The fact that it's so negative suggests that we probably will see some further downside. And the seasonal movements on the yen this week are particularly negative. But that really comes more on the back of the dollar being strong this week, really strong. We've got Aussie down, we got pound down, we got the CAD down, the euro's low for the week, and so is the yen. The Swissies
Sorry,
also.
is that COT?
That's seasonals.
That's
That's the
seasonal.
seasonals. Yeah. So the seasonals
Wow, I
this
might
week.
as well pack up and go home now. That's it.
Well,
Everything against me. Everything.
yeah, but mate, interestingly, the seasonals have been a little bit out of sync recently. So and I think a lot of that is because traditionally the Fed tend to raise interest rates in September, and not only did we get a rate cut, but we got a jumbo cut. So the seasonals are a little bit out of sync, and that does also weaken their validity somewhat. but the yen is weak, well, along with the COT data. The other one that is strong on the COT data is the dollar. So if if you're looking at COT and seasonals for the week, you'd be looking at dollar yen long.
Wow.
Now
Okay.
the dollar,
So
yeah,
to put that into perspective, and we haven't seen it I haven't seen it in the chart anyway.
yeah,
Fed cuts 50 basis points,
yeah.
surprises the market, and we're calling dollar long, right?
Dollar yen
And
long,
yeah,
according to the data. I mean, interestingly, the actual numbers, if you were to sort of take the fundamental picture from the United States, it's actually okay. The fact that they've lowered the interest rate, of course, that does drive the price of the currency, but the fundamental data is not showing huge weakness in the economy. What is suggested by what the Fed have done is that they're trying to get out in front of a softening of the economic picture. That's a very dangerous move in many respects because inflation isn't back to 2%. So does that mean that they're going to end up actually choking the economy, accidentally because they push inflation back over 3%, and they're effectively having to go either back on pause or possibly even raising interest rates again? I think they're at a very difficult position right now. All central banks, and if you look at the pound, as you quite rightly pointed out, they held interest rates at 5%. The Bank
yep.
of England. So if you've got one central bank holding interest rates and one cutting by a jumbo cut, then you would suspect that the pound dollar would be a long trade. Now, whether that's, obviously sort of things eventually get priced in and things start to get moved around, looking forward to the next meeting. And I guess that's kind of where we are. I agree with you. I mean, I'll sort of share my screen as well because
Yeah, please.
I think the analysis that you did on the Aussie CAD is a really poignant and an interesting one because I got the same thing. When I look at this on a monthly chart, so this is a monthly. I don't know if this is the best color to see it on, but if the colors aren't very good, I can change them.
Good.
Okay, so there's this trend line coming down here on the monthly, and we aren't yet through this point. We are currently in this month.
Yep.
So if the RBA come out and say something, it might even be a little bit higher. Yeah, looks okay. If the RBA come out and say something dovish, then you'd expect it under this point and back down into the range and possibly moving towards the lower end of the range, or maybe at least coming to test a trend line along here, maybe along there. So that would suggest maybe sort of seeing this horizontal level again at 0.9, so not 90 cents. But they'd have to say something dovish tomorrow for the move probably to start from tomorrow and start to come down. And it hasn't got long to do it. It's only got, another 5 days really before this monthly bar closes. A close above this zone is going to suggest further upside. A close below obviously sort of starts to suggest some downside. And, you might even be sort of like tucking in your trend line even closer. You might be sort of looking at that point. And if you look at that point, we're right on resistance. Because you can sort of like, you can draw these trend lines really for as far back as you like. And if it's going to be through the level, then it's probably going, near the next trend line up. But there may well be some resistance here. And when you sort of like start to come down timeframes, it becomes probably a little bit kind of more convincing that this is the level, particularly when you get this double top, this potential double top kind of area. So a close under this level here would suggest that we do start to kind of move back down again. That was, initially anyway, there'd have to be other signs and signals, but that wouldn't be, bullish, particularly bullish for the Aussie CAD. So you'd be looking at maybe some Aussie weakness. Aussie against the dollar particularly, the CAD's not that strong, but against the dollar particularly is weak going into the next 5 days. And we are again right on top of resistance, obviously depending on where you're looking from. But this looks like we're in this band here. So I don't think we need to rush into, as you quite rightly pointed out, any trades on the Aussie because we are right on resistance. And if they say something relatively dovish or they do something dovish, then this is potentially going to be coming down to probably, the next resistance point, the next support level at least. So there's loads of time to kind of get down here. Yeah, if we get a
Probably, actually,
massive,
I would have thought probably a very deep one, because
yeah,
they've been hawkish for
yeah,
the longest time, right?
yeah, yeah,
Saying no, 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 we're not going to cut rates. In fact, we may raise them. We're still on that narrative. If they
yeah,
continue along that narrative, then I agree. The Aussie versus the CAD is a buy, but it would be the first time that she's actually flipped into a dovish frame of mind. So I think that
yeah,
would hurt the Aussie,
yeah,
substantially, not just a little. I think it will hurt
yeah.
it substantially.
Yeah, yeah. You're absolutely right. And it's an interesting dynamic now because in the market, because we've got the Fed lowering rates, and the Bank of England didn't go. Now they only had 24 hours to really sort of either change
Mm.
or make a decision off the back of what the Fed did. And if they're still going on the numbers, then they've probably done the right thing. Inflation in the UK is at 2.2%, and I think maybe notably it stayed from 2.2% to 2.2%. So it didn't suggest that the kind of unwinding of inflation was continuing and allowing the Bank of England to maybe drift down again. I personally think that if interest rates are the tool that you're going to use to kind of control inflation, then the Bank of England have probably done the right thing. And I would suggest that the Fed have probably done the wrong thing. They were at 5.5% interest rate, so they've brought it down to 5 along with the BOE. So maybe they felt they had some room. But if you look at the dot plot, which is effectively the forward opinions of the members of the FOMC,
That was they only released that 4 times a year, and this was one of them, right?
yes, yes,
Yep.
and the dot plot kind of shows that the members of the FOMC all are looking for interest rates to continue to be reduced over the course of the next 12 months, and I find that quite strange. Considering where the battle of inflation is, and also where the labour market and some of the other kind of economic pointers are showing, what they're showing, because they're not showing incredible weakness in the labour market. They're showing just a little bit of cooling, but not anything kind of major. So it looks like they're trying to avoid a recession more than they are looking to curtail inflation, but that will weaken the dollar, and we saw kind of the result of that last week. I thought what else is interesting is the FTSE, because the FTSE saw a huge. Well, if you look at across the board, so if you look at the Nasdaq, this is the Nasdaq sort of really after the rate decision. This is the day after the rate decision. It ended up kind of moving to the upside. CAC is actually pretty heavily weak. The DAX is relatively heavily weak. So if you look at the kind of European situation, it's a lot weaker. And then if you go and have a look at, how can it be that you get a reduction of interest rates in the United States, and that's meant to be a green light to go for stocks, and yet you've got European stocks tanking, and American stocks doing pretty well. Well, if you look at really what's going on, not so much today, but if you look at really what's going on with some of these European currencies, the pound against the dollar, as the pound strengthens, the value of UK stocks become more expensive to buy for Americans. So what we might well see is a relatively evident move in the attitudes of investors in different regions of the globe. So American stocks, if not really bullish, they may well start to stabilize at minimum. Whereas I think in the Eurozone and certainly in the UK, leaving it at 5%, that would suggest that actually UK stocks start to ease off a little bit and start to get a little bit cooler. So there's an interesting kind of potential spread trade there. I wouldn't be that interested in the US stocks because they look really heavy. But if we kind of go along that kind of that thought process, then we can probably tell quite a lot of what the market feels about the yen by looking at the Nikkei. And the Nikkei has had a decent rally over the last week. In fact, over the last couple of weeks, has had a decent rally, suggesting that they think that the yen is maybe kind of intervention from the BOJ is potentially done. But look where we are. This is again sort of through this area. Does it come back here? And if that COT data plays out, this would be a buy. And if you're looking at trades on the other side of that, you're probably looking at selling FTSE and buying Nikkei. If that's the case. So we don't just have to kind of stick with the one side of it if we don't want to. We don't have to just stick with the currencies. We can use the currencies and think, well, actually, what does that open up? What else does that potentially open up? If we're worried about global retraction and recession, then we can actually buy one index and sell another one just to hedge out the risk. If we kind of really want to sort of play some stocks, we can buy one set of stocks and we can sell the other one to play out the risk. And this one I think would be quite an attractive one to look at if you're looking at the COT data and the seasonal data, particularly from the Japanese side. And if you look at the intervention from the central banks, selling FTSE also looks like a pretty interesting trade, and worth writing them down. 38.22, around about 38.20, about 38.220 for the Japanese the Nikkei, and the FTSE is currently sitting on here at 82.35. So you're looking at percentage changes between the two indexes. But that would be my play. I'd want to see it down here, but this would be a decent buy at this point, along with a potential sell on the FTSE 100. I think that could be quite an interesting trade, and that's kind of what I'm looking at this week at the minute, mate. I probably won't do anything major until we hear from the RBA. Of course, we've got the Swiss National Bank this week as well, but I think the RBA is going to be a decent barometer for global growth.
Interesting. Also interesting, I haven't got any updated data on my Forex Factory, which has actually failed, but it looks like the manufacturing, and I think it was manufacturing, went first out of the Eurozone and out of UK have been very poor. I don't know, but the chart's telling me that.
I will have a look for you, mate.
Interesting that they come up on a Monday. That's not normally the case from my recollection.
Well, this is what we got here. So this is our investing.com. So that's now, is that being reported? So the Eurozone, has the Eurozone been reported?
I don't know. Chart's telling me it has dropped like 45 pips in the last 10 minutes.
I'm having all sorts of internet problems there, but let me just see.
My Forex Factory is telling me I can't load it for some reason. Don't know what's going on.
No, I don't know whether it's the actually Forex Factory, or whether it's my system has been playing up a little bit. I seem to get some websites and not others, which suggests it's probably something internal in here.
Oh, mate, it could be cyber wars. Who knows?
Well, I've got a power line. Those power lines that kind of give you internet in different parts of the house through the electrical and through the sockets.
Oh yeah, okay.
So I use
rather than Wi-Fi. Why is that?
Rather than Wi-Fi, yeah. Well, it's meant to be stronger. I mean, it's I don't know whether it's.
Oh yeah, okay. Cable's supposed to be stronger. Yeah.
So we got core CPI from Singapore, which was higher than expected. CPI month on month was higher than expected. Year on year is 2.2% from Singapore, which isn't too bad. Yeah, it's
so actually while you're on Singapore, Lexi was talking about the Singapore dollar.
Yeah.
I haven't read that completely. Did you read that piece?
Well, no, tell me.
Well, I was going to ask you what the upshot of it was, but Singapore dollar is very much regulated from I don't even know what they're called, the Singapore people who do that, but they won't let their dollar go higher or lower than certain points. and I think
Interesting.
we're at one of those extremes.
Interesting. What that?
Mm.
Well, do you know what? I've been looking at the Singapore dollar with quite a lot of interest actually, because if you do kind of look down the list with the Singapore dollar, I mean, if we'll have a look at it against the US right now. But the Sing is an interesting one, and actually um that would potentially promote some trades in this one, because you look at it and it is absolutely it's at the extreme, it's beyond the extreme.
Yeah,
But you know, one, two, we're in the third month of heavy selling on the dollar versus the Seng. Now, if you just kind of like look around at, and let me bring this one up here just so we don't lose it. Bring it in our dollar group. Yeah, you look around, Aussie dollar, really you could only say 1 month of buying Aussie dollar. Euro, I mean, it's, top of the range, really. The pound, I think, is a little bit different, but I think that this is self-explanatory, because of what's been going on with the interest rate
can't see your
situation
charts,
with.
mate. If that's what
Oh,
you're
sorry,
showing.
mate. Yeah, that's because I was still on Forex Factory,
Yep.
on the thingy. Looks like we got half an hour before we get that data.
Wonder
Yeah,
what those
here we
moves
go.
are about then. Interesting.
Aussie. So Aussie right on top of resistance. Almost nothing unusual when you look at this chart. This just looks like it's hitting a range, hitting a range, hitting a range. So nothing really going on there. Same, I would say, with the euro. It's hit a range and hit a range and hit a range. And now we're at the top end of the range. The pound is breaking out, but I don't think that's hugely surprising due to the interest rate kind of
Yep.
separation a bit between the two. The yen's a really interesting one. The dollar yen's an interesting one, but we've sort of seen the yen kind of going against all of them. But that's also hit really, after that you would kind of expect a little bit of this,
Yeah,
to
it's the
be coming
most
down.
interesting one for me. The yen at the moment,
Yeah,
because
this is
as I
the
said
Kiwi.
before, is that a short covering rally that we've seen on the yen, or is it really going to turn
Yeah.
around?
Oh no, I totally agree. I think the conundrum of the yen sort of like continues, and as you know as well as I do, it is the hardest currency to actually
Yeah,
try and trade.
yeah,
Um,
but I'm
now we
dogged.
look at this.
I want to do it. I want to beat the yen summit.
This is the
It's my
Singapore. I mean,
challenge, my trading challenge.
this is the ultimate kind of result of the point being made here. The Singapore dollar is totally different. This is the dollar Sing, and we've broken through this area. We haven't really sort of like come down to test that, but this looks like it's broken out of a huge trading range at this stage.
Massive trading range. Where's that go back
Yeah,
to? 2000 and what chart you on?
2014. I
Monthly?
mean, this is a monthly, yeah.
2014. Yeah.
So 10 years. This trading range been in for 10 years. So that would suggest that what Lexi's saying is that the Singaporean officials are suggesting that this is now too expensive. That's what the charts would suggest. That they're saying it's too expensive. And if that's true, then it's going to pop. It should, if they do something and the market reacts positively, then we're going to try and grab this area back before the end of the month. So we've got 5 days really to get back up here. Now, this is a difficult counter trend move. That would be a very, very difficult one to counter trend. But it is these announcements and this intervention which does change the course of a currency. And it's like this right across the board. Aussie, this is the Aussie Sing. Now the Aussie Sing, interestingly, has managed to kind of like find a decent looking bar there. But again, it's been pretty heavily sold off up until now. We're very close to, again, the bottom end of a range, if not right on top of the bottom end of the range. So again, that would suggest if they're going to intervene and they're announcing intervention, then that would suggest a boost up with that. This is another one. I mean, look at that with the CAD. The CAD is again another one that looks like it's kind of broken through this range. Decent looking bar last month, so attempting to push it high, but we're right at the bottom end again of where we were last month. attempting to try and get some upside here today, which may well happen. But you would suspect that this is going to be an aggressive move if they do step in to rebalance, because nobody's going to want to be caught on the wrong side of intervention from a central bank, which is going to aggressively trying to weaken their currency. So the yen. So I've got to say, the Sing I find as a really interesting looking currency. I didn't know about
I hadn't looked at it at all, but I saw something from Lexi that tweaked my eye, and I haven't read it, and I'm not sure if it's a video or a text, but I'll revisit that now that you've given me that.
Yeah, have a look now. It'd be interesting to see what it's like against the pound. This is the pound Sing. Yeah, you see the pound has actually done pretty well. Not anywhere near as bad, but there's a bit of evidence here that the Singapore dollar is at a possible turning point. A little bit of evidence, but there's not enough to go on as yet. There's not enough to go on to sort of like say let's sell the Singapore dollar at this stage, but continuous selling on the dollar for the last 3 months has been of huge interest. I kept seeing daily wave rider trades, and every single day pretty much it was sell dollar yen, and of course dollar Sing, and of course when you get down into these areas you start going, now that's going to turn, that's not a safe trade anymore. But it continued to move, and we're looking at a monthly chart here, continue to move and continue to sell off. So it doesn't surprise me to hear that there might be something coming out from the powers that be that would suggest that our currency is now too expensive.
Yep. Okay.
And restrictive.
I'll investigate. But yeah, it sounds like a good thesis.
Yeah. One to look at, mate. So we haven't got any data from the Eurozone for another 20 minutes, another hour until we get it from the UK.
Well, show me the euro dollar chart, the 30-minute chart. It's just gone ballistic. So I'm surprised that data hasn't been released.
Oh yeah.
Something's afoot.
Well, that was the open. So that might have just been a little bit of unwinding, possibly.
Yeah, okay. Well, somebody's jumping into ahead of the news by the look of it. They have an idea, or they know the number, one or the other.
It's an interesting one, isn't it? I mean, let's just have a look. So if you look across the board, so
it eliminates my my
it's
edge
the same,
for the day.
The same across the board, mate. I mean, this is the same. Look, Aussie, same. Euro, same.
Okay.
Pound,
so they're buying dollars.
Dollar yen is not the same. Dollar Sing, a little bit of upside, but not actually it was there. So this one, yeah, they're buying dollars. Yeah. There's the Kiwi. Let's have a look at gold. Let's look at WTI. Yeah, pretty much the same. So yeah, certainly a little bit of a wave of some dollar buying early doors. This is gold. Yeah, a bit of selling on gold is coming into play. It's possible. Yeah, I mean, look at silver. So it looks like it's a dollar play.
Go silver. Go down. Yeah. I'm gonna buy some more.
Yeah. Yeah. I mean,
so okay, early in the day, it looks very much like the dollar is the one.
Yeah, which it's interesting that this is why people sort of quite rightly coin the markets as random, because if you were to say on the face of it, you've got a central bank that has lowered interest rates by a bit of a jumbo cut, that would suggest that there's going to be some further weakness, which I suppose there was, but you almost don't expect any buying of that particular currency for a while, and yet only 3 days later we're getting some pushes. So the markets are random because you don't really ever know what is turning the cogs.
You'd like to think you do, but yes, at certain times, and what's driving this, is potentially seasonal trades, potentially I don't know.
Well,
just given us that idea.
Well, as I say, mate, the COT data is very strong for the dollar, and it's very strong seasonally, very strong for on both fronts.
It's also at a very strong level, as I pointed out with the dollar index. I didn't know whether it was going to be support or resistance, but the level is super strong where it currently sits, the dollar index.
Yeah.
So
Yeah.
no surprise that it's going to move from this level, which way at the moment looks like it's going to be up. We'll see.
Yeah, it certainly looks that way.
Have you got George locked and loaded?
Oh, no, I don't actually. Let's get that done.
Okay, while you're doing that, I'll just pinch the screen for 2 seconds.
Yeah, I'm ready to go when you are, mate.
Oh, you are? Well, go there because this is not
Okay.
a rush. This is not a rush.
All right. See you from George. Any issues with the sound or anything else, just let me know, mate.
I will do that.
You got him?
No sound.
That's because that bit I forgot to share. There we go.
Good morning, traders. Trust you're well. Good morning to the
Good morning, George. No need to answer back.
And welcome to Trading Buddies. Thank you to Jeff and Ash for having me as a guest. So first and foremost, excuse me for bundled up as an Eskimo in my warm attire. I'm actually going to just switch off my video in a moment. Let's switch off the video. And let me tell you the beautiful fun that we are having here in our market. So what's taking place is that for some strange reason, we've had this cold front come up out of Norway, completely out of Norway. And we were in spring, 25 to 30 degrees Celsius, weathers, which is beautiful. We love it. But all of a sudden, we just got hit by this cold front. Johannesburg down to 5 degrees Celsius. If you have a Google search on what's happening weather South Africa, you will see that some places have got deep snow. You would think that you're in the depths of these northern countries, northern hemisphere countries, in terms of the snow that we've got. Beautiful weather to look at, terrible for those who are caught unprepared for it. But fortunately, we can carry on with the show. So it's super cold, 5 degrees Celsius, but we can carry on. So we are carrying on looking at these 4 markets that I've put up: DAX 30, UK Brent, silver, and Euro Yen, representative of indexes, commodities, currencies. So the reason I've chosen these 4 markets is just to give us a bit of depth in the markets that we're looking at. And what we are looking for is insights into price action. Doesn't matter which way you trade the markets. At the end of the day, you're going to get to look at the charts and make a decision. Now, whether you are trading fundamentals primarily, or you're a price action trader like myself, or somewhere in between, it really does not matter. If you trade the daily, the monthly, the weekly, the hourly, the 15-minute chart, the 5-minute chart like I do, also doesn't matter. The only thing that you're going to have to add on to the charts is all the other indicators that you use. The only thing that I have on my chart, which I don't have here, is the moving average that I use. I use one single moving average, the 10 EMA. So you can put in whatever the 100, 150, 250 EMA. Does not matter, any EMA that works with your strategies. Point of having these clean charts and all the lines on it is just to give you insights so you can become a lot more profitable by just having another view to look at the market. So I'm leaving all the markers that we have, and all the technical terms that go with it have been explained in previous videos. I'm going to put a link on this video, but can also go to all the videos that I'm putting up since the beginning of May, trying to stick to plus or minus 15 minutes, 15, to make it easy for us to review. So DAX 30, we carry on. We got a double top, absolutely fantastic double top, good enough reversal for the bears. This is what you want to see in the double top. And I see a bear acceleration coming off it. It's topping up with what we have here. We didn't have a bear acceleration, but with a bear channel, good for the bears. With the lower high, good for the bears. Another lower high, good for the bears. So the bears in this price area have been strong. They've had a problem with the bulls. They've been super strong, but they stopped that bull rally and now we have a double top. So if you are not already in this market, I mean, if you are in even anywhere from here, by now, you should be pulling your stop up and saying, might be a little bit concerned of the double top if you haven't exited, but you just hold your stop in case you get bull acceleration. If you get acceleration above this, the bulls will be strong and they're just going to go up into the highest heavens and just keep going. But at this stage, double top favors the bears. What you do, if you want to trade the early trade immediately off the double top, you're going to sell beneath here. I would put a measured move stop somewhere above here. I wouldn't put my stop here, because I don't have enough evidence yet. But if you want to get in early, in case we have acceleration all the way down, use a measured move stop. If you want to wait for confirmation, then you wait for confirmation. Of course, the trade-off is if you wait for confirmation and the market starts to go down, or if the market is starting to go up, there's less profit left, but you get higher probability. So the trader's equation always balances things out. So market looking positive for the bears. Yeah, we can say that positive for the bears. And you got to decide what you want to do. On the 5-minute chart or any lower time frame chart, I'm going to have the low of yesterday marked, which is the low of Friday. And I want to see if the bears are going to start to accelerate beneath that. Whatever time you come to the market, that's a key level to have marked on. And if the bears are going to sell off, I'm going to make sure I'm going to sell off. But remember, trading the 5-minute chart, you'll have beautiful trends going up, beautiful trends going down, trading ranges. And end of the day looks like, oh my goodness, look at that beautiful bear trend. If I had been a 5-minute trader, I would have made a fortune. Not necessarily. If you ever look on last week, some beautiful trends on the daily, we're just trading ranges. And then, the news does this big bull candle and ends up as a beautiful day. So doesn't matter which market you trade, you got to go in and look for the opportunity. So if we're selling off, I'm going to sell tomorrow. If there's a beautiful setup for a beautiful rally, I'm going to buy. If you go trading range, I'm going to stay out. I can get out of it fast enough. So remember, execute the trades, manage the trades. Rather, 3 things that I look for. I look for the setup, then I execute, and then I manage it. 3 distinct things. So bearish price action is what I'm looking for. I think if the bears are strong, they might want to get to test this level. And this level is pretty key for everybody because the bears are strong and you sell off here. And if they smash through here, then remember we spoke about this significant level in terms of the bulls. They're going to just want to keep going down until we get down here. So if you want to take a trade, take the lower probability trade, measured move, or wait for greater certainty. Greater certainty may be in the form of a bear breakout, pullback, lower high, and because you might have to wait a little bit. Okay, Brent, interesting. Bulls are pretty strong. We are in a tight bull channel. Overlapping candles. It's a trading range, but it's going up, so the bulls are strong. And the bulls need to do one thing for us. Either going to stay in this channel, just going up higher, which means if you want to buy, if you think, I think the bulls are going to stay like this, your stop is going to be down here by this stage. If you bought here, use a measured move stop. Now you pull your stop up. If you're buying anywhere near, you got to keep your stop here because you're saying, I think the bulls will keep channeling up until they have a big breakthrough above here and maybe you get, higher than this trading range. As it is, we're going to be getting, we could have done that, but I think could have done that and said, well, we're getting back into the trading range. So if the bulls are strong, we're going to get above that. But I think the key area, whatever happens, that they need to break above is this big bear candle that represents bear strength out of the trading range and follow through. So if you're trading on the daily time frame, if you want to get in at any time, you can, but you got to keep your stop way down here because, we're kind of in the middle of decent price action by the bears here and the bulls want to go up. So your stop can only be in the extremes, unless you want to scalp on the daily time frame. I'm not sure you want to do that. Even if this was a 5-minute, I would still say put your stop down here. What I'll be looking for if I was trading this on the daily time frame, I want to see, as I said, you can take a trade, put your stop down here. But I'm keen to see if the bulls are going to be breaking out above here. So because you are traders, you trade the daily time frame, you put your stop down here. If the bulls accelerate above here, you could actually put an entry if you wanted, but stop has to be down here. Would I sell? No, I would not be selling in this tight channel. So I'd rather wait. If I'm going to sell, I want to see the bears breaking out beneath here, pull back and selling off. Like we broke below this level, didn't get down here, but you had a pullback and a lower high, so you could have sold here. So if you're gonna sell, breakout, pullback, low one. If you're gonna buy, stop is gonna be down here, and get into the market and see what happens when you get here. If you wanna wait, then wait and see if you're gonna keep channeling, and see what happens up here. And maybe your hope is to see a breakout, pullback, and go up. So that's my thoughts on Brent. Again, on the 5-minute, I'm just going to go in. And if I see opportunities to buy, I'll buy. I see opportunities to sell, I'll sell. I always have my markers in high of yesterday, low of yesterday. If the market breaks out above it, I'm cognizant of the fact that we are in a tight channel. So I can expect any breakout above a high to come back into the channel. And we just keep channeling up. That is perfectly fine. We manage it as we go along. Silver, we spoke about it. Interesting. Have a look. Big bear sell-off, and we marked this right at the beginning. We've been trying to get up. Good for the bears on 543 on Wednesday, but tail at the end was a problem, and they did not follow through. Bulls trying to channel up, trying to break out above here. These tails means there is a lot of bears coming in to sell into the close, sell into the close, sell into the close, sell into the close. So bears want to do this and accelerate down. They're defending again this price action that we have. This is a high of 2024. It's not the all-time high. There's more other highs on the left, but this took place in May. So they don't want, the bears don't want the bulls to get up there. So this is beautiful. If you are in a trade like we spoke before, by now you pull your stop up to here. It's a really clean example of when we say don't put a tight stop. I mean, you buy here, you're out. Better use the stop always in the correct place. So now for daily traders, do you want to get into the market at this stage? As a bull, I probably wouldn't. Even if you get a big bull candle, I wouldn't, unless you want to put a stop down here. As a bull, you better wait for more price action. As a bear, there's better opportunities for you. If we get double top price action, get a candle like this right here, boom, then, you can look to sell, sometime during the week if you got that. But again, you got to be using a stop way up here because there's a key magnet that can just pull the market up. So, get a big bear candle, sell, and hopefully see what happens when we get down to this level. Let's just mark it. Okay, that's going to be a key level here, back in this middle of the trade range. If the bears are coming with successive bear candles like we had here, 1, 2, 3, you might get a breakout pullback and you sell. So if you're selling, fantastic. When I wait for the pullback, higher probability. Wait for the breakout pullback, like we had breakout pullback low 1, you can put a measured move stop and you can still get decent 1-to-1. If you take in the earlier trade, the measured move stop, of course, a lot more profit and you can scale in. So that's what you'll be looking for on the daily time frame. Big bear candle, sell if you want to get in early, or wait for the pullback or scale in. All right. I am close to getting to the end. Finally, Euro Yen. So we had all these markers, so key level that's been defended by the bulls. This is low of 2024, which took place in August, that big low. Bears go to their satisfaction. Bulls have been buying. So bulls are pretty strong as far as this market is concerned. Now, what the bulls need, of course, is to accelerate up and get above these levels. They can do that, just keep on putting bull candles. They put bull candles in here, they put bull candles in here, they can keep doing that. If you want to buy, you got to be putting the stop in the correct place. Remember the markets are fractal. Whether this is the daily as it is, or it's a weekly, or it's a hourly. If you're going to be buying here because you think the bulls are strong enough after all this price action, your stop is going to be down here. That's not pretty decent, or you can put it still a little bit lower, a little bit more conservative. Just gives you room if you start to fail to get out with a little damage to your account. That's trade management. If you get something like this, you can get and say, okay, bears are coming in to defend their lower height, but if they keep going up, I can trail my stop up, and hopefully get a breakout and keep going through and worry about this next level that the bears are willing to defend. So if you want to buy, you do that, put a wide stop in. The reason we do that is because we can see these lower highs that can get in the way. So we don't want to put a tight stop and get stopped out the next morning. Put the stop in the correct place. If you want to sell, I would wait to see a decent trend candle, something like that. then I can say, oh, actually, this is a lower high. So the bears have an opportunity to sell and get down to this low. In the same way, if you've got a bear candle, you got to put your stop up here. That's pretty aggressive, or you can put it a little bit higher. Even if we work out a measured move, it's about there. So those are my thoughts. Enjoy yourself. Thank you for having me. Thank you, Jeff. Thank you, Ash. We shall catch up with you guys again. I am going to enjoy a cup of coffee and have a good time. Take care, guys. See you next week. Bye-bye.
Actually, it looks like George needs a very strong cup of coffee. It's very cold in South Africa. Interesting. I don't know what's going on there. As he said, the cold snap. That's the way it works sometimes. I best get some data on the screen. There we go. The reason I want to look at this one, you're right, mate. No drama. All good. I'm going back to the dollar index because, well, let me do this in two ways. When I did my analysis for the week, this was one of the trades that I was considering taking, and it was US dollar versus the CAD short, not because of the interest rate or the surprise volume of the interest rate cut from the Fed, but because of a technical scenario. And I'll go a little bit wider so you can see that maybe a little bit clearer. You could bring that range, down to here somewhere if you so chose. But the reality is that this, as a ranging pair normally, is absolutely coming off the top of that range and has put in a potential for a lower high. George was just speaking about lower highs. I absolutely love lower highs as well. The one thing that kept me out of placing an order on this morning, this is dollar CAD on the weekly chart, was the fact that it came off its low and gave us a spinning top rather than a reversal bar. It's kind of one and the same, if you like. But that's the monthly pivot that we're talking. We've come off the high of the range, looking for the bottom of the range. Everything inside me technically is saying, I've got to sell this. I've got to sell this underneath this bar. Yet, everything I've seen and heard so far today is telling me exactly the opposite. I've experienced that many, many times before. And when price is down here, and I should have taken that trade, I think to myself, what on earth was I listening to all of that noise for? So I'm going to stick to my guns here. I'm going to sell dollar CAD as a weekly trade underneath this bar. The fact that it's now rallied is actually good for me. And the reason it's good for me is because if I'm wrong, I'm probably wrong now. And the dollar is going to continue to rally and maybe create a lower high up here somewhere. And that's fine. Don't have a problem with that because I won't be taken into the trade. What I will do is place that order under here, put my stop loss above it, and get a very, very tight first take profit. So I'm safe in the market when we hit a support level. So I'm going to trade dollar CAD short. If you want to know the levels, I'll give them to you. It will be, once again, a weekly trade. So it'll be in the market until close of business in my world Saturday morning. The entry is going to be at 1.3525. So 1.3525. Hang on, I'll just write this down somewhere so I don't forget it. The stop loss, I'll just use the bar, the candle, 1.3655 will be the stop loss. And I will take my first profit at the open of this bar here, which will be 1.34, we'll call it 1.3485. Might not be enough. Let me just work that out. So I've got 130 pips of risk and I've only got 40 pips of profit. It doesn't look right, but that's what I'm seeing. Okay, I might extend TP1 down to the low of that bar, 1.3439. Maybe I got that wrong.
Numbers just in from the Eurozone, mate. Manufacturing weak. composite weak, and services in expansion, but weaker than expected and weaker than last month, only at 50.5. So expect
they
some
knew the
weakness in the
numbers.
euro.
They
Yeah,
knew the
yeah,
numbers.
they were ahead of that game. That's
Yeah,
that
they
seems to be
certainly
the
were.
case.
I'll give you. I got that level wrong. The open of that bar is 1.3485. That's right. I've got it right. So TP1 is going to be at 1.3439. That's a much better reward to risk on the first part of this move. So if you want to follow that, happy days. It's completely counter everything that we've spoken about today. However, it is a genuine setup for me, and therefore I'll take that position. If I'm wrong, as I said, I shouldn't be taken into the trade, and we might see price up here where I'll try again if I get the right signal. Apart from that, you've got the pound Swissy trade, you've got the Swissy yen trade, all on the weeklies. I would add on pound versus the Swissy that you may get a far better price than what's available on the weekly chart. If price were to come back to, say, the breakout level, which is very, very strong, there it is there. So if price were to come back here, I would look to buy it here rather than where I have bought it, which is above the high here. But I'm so keen on this being a bull move that, and this is extremely unusual for me, but I don't want to miss this. And for that reason, I've got my entry above here. But I'd love to be able to get in down here somewhere. That would be good on pound versus the Swissy long. We shall see if it sets up. Would be the second higher low out too. And I love the second higher low out. They're pretty good. That's going to be me, buddy.
Thanks, mate. Well, so yeah, it's, all sounds good. I think I was just looking around actually for the report from Singapore, and I found something from August the 30th, which suggested that if the US manages to attain a soft landing, then the Singapore dollar might weaken, and also there is a meeting in October where they're expected to lower rates. So maybe it's coming off the back of that, but I suspect Lexi's probably got something a bit more recent. I don't know. Where did you see what she wrote? Was it on Telegram?
I think in one of the Telegram groups, mate, but I
Okay.
could be wrong.
I'll have a hunt around.
Yeah, if I find it, I'll let you know.
Thanks, mate. All right. Amazing.
When we meet this week at some stage.
Yeah. Let's try for Thursday again.
Yeah. Okay. Happy days. All right, guys. Thanks for being our trading buddies as always. We will do it all again next Monday. Hope you have a great week ahead, and please win some money, will you? Have a good week. Bye bye for now. See you, mate.
See you soon, buddy. See you guys.